Hey everybody, I'm Matthew Dixon, bringing you the Traders Report for 3.0 TV. So we had the Fed decision last night, 25 basis point cut in interest rates as expected. Interestingly, we look forward to the next cut, and it's not going to happen by the look of it. We're talking about January 28th is the next Fed meeting, and there's actually just over 80% chance that we're going to stay on hold that meeting. But last night, of course, we did cut. But I think it's very much priced into the markets. We saw very little effect to the market. And surprisingly, yeah, we're still in pretty much the same position as before the cut. So for Bitcoin here, we have basically a first wave down, second wave up. So it could be A down or one down, two up or B up, and then three or C down. And we're still in a choppy, potentially wave four. I mean, I just would like to think that we could get a Christmas rally out of this. But at the moment, it doesn't look too promising because after last night's rate cut that we had, 25 basis point cut, I guess it's all priced into the market. We've not had a particularly good reaction since then. But there's no major selling or buying pressures. And I guess that's why the market is choppy and just going sideways. But we do have some bearish divergence. This is hidden bearish divergence where we have lower highs in price and higher highs in corresponding RSI. So we have there some bearish divergence, and actually the price has started to sell off since that bearish divergence came into play. So there is a risk that we have basically wave one down, two up, three down. This is wave four up, and potentially five down to take us to a lower low than below this 80,000-ish level here. So potentially we could dip down even further. That would be a little bit worrying because it's five waves down. It could still basically be a large 535 down before higher. But it's concerning because it could potentially mean that the ATH or the all-time high is actually now confirmed in place potentially, and that we're beginning the next impulsive direction to the downside. Five waves is an impulse. So following five, you'd expect three, or some kind of corrective move higher, then a further move down. So if we do move below this point here, this is very, very key, this 80,600 level here, if we move below that, we have five waves confirmed at that point. And then, as I say, the risk is that we will eventually go quite a lot lower for Bitcoin and obviously crypto as well. I think Bitcoin will continue to lead the way. So possibly we do actually have a potential wave four in place there and potentially moving down to wave five. So as I said at the last traders report, I didn't recommend taking any new positions. I said, wait for the Fed, see what happens. We've now seen what's happened. We've had the 25 basis point cut, but the outlook for looking forward is for fewer cuts. And we'll just need to watch out for inflation figures and see where that goes. So yesterday, just clipping over to the inflation figures yesterday. I'll need to refresh that, I think, just to see what the figures came out at yesterday. As it's refreshing, here we go. Need to go back to yesterday. There we go. So, okay, we got employment figures which were pretty much in line with expectation. Actually, costs were slightly down, so slightly lower inflation expectations there. I don't know quite why it hasn't updated inflation figures for yesterday. China, by the way, inflation we had there came out pretty much in line with expectations or exactly in line with expectations. So no major surprises there. So I guess that's again why the market's just chopping sideways. This choppy sideways movement means that basically it's pretty much undecided. And if we were to look on a long-term candle, so look on the monthly here, just to expand this out so you can see it. It's actually really interesting. This is what's known as a doji candlestick, where basically price tested higher and failed, it tested lower and failed, and it's right in the middle. That means that the market is actually undecided, doesn't know which direction to go. And that's why it's a really dangerous place to think about taking new positions, because we have this doji candlestick. So, we'll just need to see how that plays out as we go through December and just see if that changes from a doji. But at the moment, that is an indication for me not to take new positions. And I'm actually out of the market at the moment. My traders portfolio is flat right now, not taking any new positions. Moving over to Ethereum, just go back to daily again on Ethereum. Actually, we'll just have a quick look again back at the monthly, see where we are there. So Ethereum's in a slightly better position than Bitcoin. Bitcoin we just saw was a doji. We actually see quite a bullish looking candlestick here for this month of December. Here we had, of course, the Fusaka upgrade, which was an Ethereum upgrade. That was taken reasonably positively by the market, and we've got a nice little up move there, a nice green candle. Potentially it could continue. If we go back to the daily and see where we are in a daily position, unfortunately, this does look kind of corrective higher at the moment. It looks very much like an ABC movement higher. It does look corrective here, even though we had this Fusaka upgrade. It's not really powered the market forward. So we could expect that possibly we do have, like Bitcoin, possibly another lower low below this low here, which was at 2,600. So potentially, you know, not particularly bright outlook, I guess, there for Ethereum. XRP is similar situation. There's no particular impulsive movement actually either up or down. If anything, I'm actually more favoring the upside here because we have a little bit of what looks like an impulsive movement up here, but then choppy sideways. So mixed bag there really, but no real conviction either way. Same with Solana. Again, we've had, you can see again, sideways choppy movement there, no conviction. Normally that's what's known as a bear flag, where you get basically this flagpole downwards, then you get a kind of bear flag waving in the wind. Then you might expect a lower low here. That would align with expectations that we have now for Bitcoin, Ethereum, etc. There's a lot of others. I mean, just looking at Jasmy, which has been really had a bad time recently. Looking at Jasmy long term, we can see it's had quite a long term decline now. We're in, it's around a long term sort of support level, but there's potential to go even lower. We can see so Jasmy's not looking too bright at the moment. Again, not somewhere where I'd look to take a new position because it's lower lows and lower highs all the way and continuing lower. With continued red candlesticks there. I can't see any particular reason why you buy it. RSI is, it's not oversold at all. So there's potentially room for more downward movement there. Now, if we move over to equities, we've got, it's looking a lot brighter with equities at the moment. Just to scroll out a little bit here. In fact, I might go, yeah, okay. So we can see basically, I think we have a large wave 3 there, choppy wave 4 down. And we're working on, I think, a final wave 5. So we've got, within the wave 5, got 1, 2, 3, 4, and working on a 5 of 5. So the fifth wave of the fifth wave, actually of the fifth wave. So potentially higher to go. Quite a bullish looking few candlesticks there. So in contrast to the doji that we had on Bitcoin, which was undecided, this is completely different. Basically a kind of shooting star candlestick where a long tail down below where price tested lower failed, and it's actually looking potentially to push higher at the moment. So yeah, that's looking reasonably good. And I think we'll just finally finish on gold. Gold looking extremely bullish. I'll go back to daily on gold, and we can see what a long impulse that's been, by the way, when we look at the monthly there. But yeah, gold's looking reasonably promising, although that does look a little bit choppy. We might expect possibly maybe a bit more of a correction down. So the movement that we had here, this movement down could potentially be either a completed wave 4 or it could just be wave A of wave 4. So if it was, I'd move these labels around. So I'd move the A down here, expecting C over here, and wherever I've got B. I'd expect it to be maybe up here. So we've got an A, a B. So potentially we could push down in a C wave for gold. So again, I'm not even looking to take positions in gold right now. I think we've had, obviously, from this point, which I think was a fairly clear wave 4, it was a triangle, which is a wave 4. Then we have wave 1, 2, impulsive wave 3 to a big extension there. Now, as I say, wave 4 is either complete here or we have more to go on wave 4. There's plenty of room. Wave 4 cannot overlap wave 1. So there's plenty of potential downward movement for gold. So I think that gold may take a breather. It's had a long run over a long time now, multi-year run. And as I say, this triangle here is typical wave 4. We're looking as though we're in a final wave 5. So there is definitely, I believe, a new all-time high to come for gold, but maybe not yet. So not quite the right time to be taking a new position. And I said that was the end, but I think we'll finish one more chart here with DXY, looking at dollar index. I think this is a large C wave to the downside. We've got wave 1, wave 2, wave 3. This is some kind of choppy wave 4, and I think we're going to see more weakness on the dollar. That's the only bright spot really for crypto. If we do see weaker dollar, continued weaker dollar, it may actually mean easier liquidity, more liquidity in the system. Maybe they're going to, they've stopped QT at the moment. Maybe they'll even start QE if the markets, the economy slows. Who knows? But at the moment, the dollar is looking as though it's going to decline further and maybe cut through this long-held parallel channel support here back from 2009 when Bitcoin was created, when we had the financial crash. It's had this long-held parallel channel, but I think we're actually set probably to break that channel to the downside, which could be good, could give a last maybe blow off top for crypto, for equities, etc. So 2026 is actually going to be very challenging, I believe, extremely challenging, but there's a little bit of room maybe for some upward movement as we finish 2025 and in the early stages of 26. But beyond that, I think things are going to look challenging. So that's it for today. Thank you so much for listening and look forward to catching up after the weekend. Bye for now.